Hello, thank you for attending the webinar today, and welcome to the International Society of Tropical Foresters Conference. Today I'll be talking about capital markets, environmental social governance issues, and forestry, paper, and wood product sectors. First of all, I'd like to thank Sheila Ward and Blair Orr for the kind invitation to attend and present at today's conference. Next, I would like to thank you for attending. Wherever you may be, morning, evening, or night in your time, thank you for attending, and if you have any questions, please do not hesitate to reach out. I work for Planet Tracker. Planet Tracker is a nonprofit financial think tank that works to align capital markets within planetary limits. Planet Tracker focuses on enabling the investor community to understand ecological limits so that investor community itself can align capital within those planetary boundaries. While currently I manage the plastics program, for the previous 15 years, I was significantly involved in the forestry markets. I was previously co-chair of the Society of American Foresters working group on certification and sustainability for 5 years. Today's agenda, we're going to talk about the company's scale and scope in the forestry, paper, and wood product sector. We're going to talk about recent investment performance during COVID. We're going to look at the top 20 and top 50 companies. We're going to introduce the concept of environmental social governance, look at companies' policy gaps, then look at top equity investors' comments and top lenders, briefly discuss green bonds and green loans, a bit of international trade market trends, a couple case studies, and a conclusion. We're going to do all that in 20 minutes. So first of all, there are 336 publicly traded companies with 10% or more industry-specific revenue in this universe. So that means this is a list of the companies that are focused on the forestry, paper, and wood products. These are publicly traded companies whose shares trade on exchanges. 336 companies that you may have heard of or in fact be working for. The market capitalization of these companies overall is over $400 billion. That's how much the market values these companies' shares at. And the industry-specific revenue is $186 billion. As you can see, the companies are throughout many sectors, subsectors, industries, and sub-industries. We have forestry, paper, and wood products as the overarching sector. Then a subsector would be forestry and logging, paper and pulp mills, and wood products. Then you have industries such as timber resources, logging, nursery and tree products, rubber plantations, paper and pulp each separately, structural wood and non-structural wood, and then of course sub-industries, sawmills, softwood veneer and plywood, engineered wood, wood preservation, hardwood veneer and plywood, and reconstituted wood products. This is how the capital markets looks at the forestry, paper, and wood product sector overall. And here on the left, you can see where the total market capitalization and industry revenue and the growth over the last year, the current price to earnings ratio, and the total count of companies in this sector. Do note that the table below also includes companies with less than 10% industry-specific revenue. So the table below is larger than the 336 publicly traded companies, which are the focus of today. COVID has been a challenging time for the industry. You'll know this more than me. But we see this in forestry and logging and timber resources, logging and nursery tree products, where industry revenue growth over the last year is negative 17% and negative 5%. Pulp has also been at negative 12%, and hardwood veneer and plywood has been negative 7%. Paper, on the other hand, has had significant industry growth, revenue growth with growth of over 69%. The 337 companies that have 10% or greater revenue, pardon me, that's a typo, it's 336. 51% of the industry revenue is controlled by only 20 companies. And 78% of the overall industry revenue is controlled by 50 companies. So the sector is highly concentrated in 20 companies at over 50% of revenue and 50 companies with close to 80% of overall chain revenue. The top 20 companies ranked by revenue are UPM, Weyerhaeuser, Nippon Paper, Suzano Storenso, Sumitomo, International Paper, UFP, BPMP, Empresas Copec, OG, West Fraser, Canfor, Shandong, Sapi, Domtar, Empresas, CMPC, Dow Paper, Alstrom, and Indah Kiat in Indonesia. This sector is facing investor push to change their operations. Investors are looking at the forestry, paper, and wood products sector through an ESG lens. Now, let me explain what ESG is, as some of you may not be as familiar with ESG as someone like myself who's been working in this sector for 15 years. ESG stands for Environmental Social Governance. The ESG is how a company functions above and beyond its financial metrics, right? So for companies in the forestry, paper, and wood products industry, key ESG issues include water use and availability, pollution through pesticides and other impacts on soil, positive and negative climate impacts. Obviously, from a positive impact perspective, carbon offsets are an issue that are quite popular at this moment. Planting and harvesting techniques and resource management, and protection of biodiversity of ecosystems. That all falls within environmental, within ESG. Social includes land rights and indigenous peoples' rights and rights for forest-dependent communities, relationships with local communities and other key stakeholders, including unions and other organizations, labor standards, supply chain custody, particularly regarding illegal logging and illegal and illicitly sourced product. Governance includes anti-bribery and corruption standards, quality of management plans, grievance mechanisms available to key stakeholders. Now, this is a list by an organization called Principles for Responsible Investing. If you wish to receive this document, please let me know. It's publicly available, but as courtesy, I can send it to you. This document is called An Introduction to Responsible Investment in Forestry. That describes the key ESG issues facing the forestry, paper, and wood products industry. Now, the companies with 10% or greater revenue from companies with 10% or greater revenue in the sector, I've assessed them for key policies, and I've assessed them for the key ESG policies that may be relevant to your day job. These include biodiversity policies, you can see on the left, sustainable packaging policies, waste reduction policies, water policies, energy efficiency policies, and climate change policies. What this is an assessment of these companies of whether they have policies in place to address these issues. It's not an assessment of the quality of these policies. The analysis is binary, yes or no. Does a company have a policy or not? Most companies in industry do not have policies related to biodiversity, packaging, waste reduction, water, energy efficiency, or climate change. Whether we look at whether we score this from the percentage of companies that have a policy or the percentage of companies ranked by total industry revenue that have a policy, in all cases, it's less than 31%. Now, when we look at the top 50 companies, remember, the top 50 companies are responsible for about 80% of total industry revenue. Let's see if they too have policies. Unfortunately, similar to the previous slide, the top 50 companies also lack policies on biodiversity, waste reduction, water, energy efficiency, and climate change. Do note that I've taken this data from the financial data aggregator Bloomberg. At times, not all data or policies that a company has translates into the financial aggregator data itself. So there could be some missing policies. But broadly speaking, most companies in the sector, again, when looking at the top 50 companies, lack any policies regarding biodiversity, waste reduction, water, energy efficiency, or climate change. Next, I want to talk about, do companies, equity investors, have policies that could be relevant to your day job and the work you do? Broadly speaking, most equity investors, which are companies that own shares, which are investment firms that own shares in these publicly traded companies, lack policies themselves on climate change, biodiversity, energy efficiency, water, and waste management. So it's not just the companies that lack the policies, the investors also lack the policies. There are some examples where investors are starting to deploy policies broadly. Below you see text from BlackRock, the largest investor in globally with over $8 trillion in assets. You can see their policy here described. Now, you can see in this policy that is very high level and does not necessarily contain a commitment to addressing biodiversity, climate change, water, waste management, and energy efficiency that would be relevant to boots on the ground or to a local logging concession or wood products production facility. Lenders themselves who lend funds to these companies in the sector, which can include bonds or loans or other types of financial fixed income products, they themselves often do not have policies. But here you can see who are the top 40 lenders to the industry for the top 50 companies over the last 11 and a half years. The leading lender is JP Morgan. Then we have some Thai and Chinese banks. Then banks in Japan. And then you have Deutsche Bank, Nordea, which is a large institution here in Europe. And some other banks, including Citibank, BNP Paribas, Credit Suisse, and as you can read down the list, Daiwa Securities, Goldman Sachs, and others. These are the banks that are lending money to the forestry, paper, and wood products industry. As you can see in the volume column, this is the total volume or total dollars in of bonds and loans that they have lent to the industry for 11 and a half years. To do this assessment, I looked at 352 bonds that were issued by these top 50 companies, including their parents and subsidiaries. Only 20 of the bonds are green, interestingly, which is $6.4 billion out of $74 billion that I assessed, or about 9%. Now let's pause for a second. What is a green bond? A green bond is a type of fixed income instrument that is specifically earmarked to raise money for climate and environmental projects. Green bonds are ring-fenced, which means that the funds can be only deployed to retooling industry towards greening its infrastructure. They often carry a higher credit rating or the same credit rating of the actual company itself, and they're popular currently in the capital markets. And because they're popular, the interest rate that the company might pay otherwise is less than it would be normally. So it's a cost-saving tool on the interest rate, but the companies are held to greater scrutiny on what they'll do with those proceeds. Examples of green bonds in industry include companies retooling their facilities to make have greater energy efficiency, to addressing water risks, improving managing biodiversity risks, improving the sourcing of timber so as fewer opportunities for illegal and illicit timber to enter the supply chain, and many other types of similar projects. The key issue here is that most of the bonds in industry are not green. Now, then I also looked at corporate loans. There are 297 loans issued by the top 50 companies. Again, the top 50 companies are about 80% of industry-specific revenue for this industry. Only 3 of the loans are green. So again, a lot of opportunity for improvement here, and a lot of opportunity to retool the industry towards sustainability, towards better climate management, towards better biodiversity management, towards better waste and water management and energy efficiency. So in that sense, it's a pretty exciting time to be a banker to the industry, to the forestry, paper, and wood product sector, because you have the opportunity to retool industry with the type of with the funding you can do from either bonds or loans. Now, I also want to point out that not all the data that's out there has a firewall. Much of the data is free. Free is a good word, isn't it? It's the type of data that we can use and easily, think about and review, and it can be useful for us professionally. So this is the Observatory Economic Complexity at the Massachusetts Institute of Technology. It's a free web page, and all you can see here, I've analyzed the exporters of particle board of wood, that's the category, it's a bit awkward to say, in 2019. Total exports were almost $8 billion globally. Where I live in Austria, 9% of the global market came from Austria, right? You can see that. 18% was from Canada. The greatest importers were Canada, United States at 18% and Germany at 9%. Very interesting to see these types of figures. You can dive into other wood product categories on the website. If you have any questions, please email me. I have my email at the end of the presentation, and we can discuss this further. Now I want to describe what the market looks like currently. Very interesting, random length lumber futures that trade in the Chicago Mercantile Exchange have skyrocketed during COVID. You can see here on the right side where the black line is the price of the spot market of these random length lumber futures. In the future price, you can see that the price has changed dramatically. In many cases, increased by up to 5 times over its baseline average over the last 35 years. So I analyzed data back to 1985 for this futures contract, and I've only presented since 2010 here, so for the last 11 and a half years. This aligns with the banker analysis that I did, where you saw who the top bankers or lenders for the last 11 and a half years since January 2010. You see the same data here. And the price has gone up to about $1,600 and now has declined to $900 last I looked. Interesting, the average price is about $380. The low was under $200 in June of 2010. Why has this occurred? It's occurred because because of COVID, they've been locked up in their homes, and they're starting to do home rehab and additions. And housing starts have increased significantly. So now, at the same time, because many facilities had gone on to lockdown themselves, either logging concessions, or forestry, paper, and wood products production facilities had gone into lockdown, supply was also diminished at the same time that demand increased. Now that some of the countries around the world are coming out of lockdown, we're starting to see a reversion to baseline pricing, and that's why you've seen a decline from $1,600 to about $900 over the last month. This decline is expected to continue to about $500 moving forward. I'm going to talk very briefly about 2 case studies, and then we're going to conclude today's presentation. One thing I want you to be aware of is the case study of Lumber Liquidators. Lumber Liquidators is a seller of domestic and exotic hardwood flooring products in the United States. They are publicly traded. Their timber that they were marketing and selling in the United States was detected to be stolen from rare tiger habitat or protected natural areas from Russia and then transported through China in 2013. This resulted in a fine of $13 million in 2015 and the resignation of the CEO. In 2013, when I was on Wall Street, I had a $5 million position in Lumber Liquidators. I read this report by an environmental investigation agency, and my portfolio manager and I immediately sold our position. We sold our position when the share was valued at about $115. The shares have now declined to about going between $15 to $20 on average for the last couple of years. So we saved our investors, our mutual fund investors, and which are many people in the public in the United States, quite a bit of money because we sold our position at $115 and then it declined. Here we saw an early warning sign in reading this information about how they're illegally relabeling timber as Eurasian oak and selling it to the U.S. market. We understood that the risk would be about customs duties and illegal or lying on custom import forms, and that's what we have subsequently happened. Now, obviously, then Lumber Liquidators had following other risks associated with higher than legally allowable formaldehyde levels. Currently, though, the situation is not much improved. Much of the U.S. imported wood is mislabeled according to the U.S. Forest Service, World Wildlife Fund, and WRI. So while this risk, managing this risk is very important for investors because they don't want to lose money in their investments, industry continues to import illegal timber into the United States. Now I want to pivot to something a bit technical. Why did Noble Group, the energy trader, get delisted or removed from the Singapore Stock Exchange? Financial accounting fraud. Now, we can go into the details. I've co-written an excellent analysis on the financial accounting fraud that occurred. I can send that to you. My co-author is a professor at Stanford University. Now, what happened? Noble Group, which had two large palm oil concessions, yes, a vegetable oil, and yes, not a timber company, I understand, but it's completely related to how the forestry, paper, and wood products sector does its financial accounting. They had listed their two concessions for sale for 4 years. And as such, they priced those concessions at what they thought they would get in the market. That they cannot do that according to accounting rules. So they overstated the value of their concessions, as you can see underneath here, by $130 million. That impacted all their investment and financial ratios and overstated the value of the overarching company, which is fraudulent. When we found out about this, we discussed this issue with the company. They then subsequently revalued their palm oil concessions by $80 million, decreasing the value overnight by $80 million. At the time, the company's was worth about $320 million. So what you can see here, it's really important, even if one is a forester, to have some sense of these two outstanding issues: financial accounting risks that are in the industry. As we saw previously, whoops, I need to go back. I can't do that. As we saw previously, issues around lumber liquidators importing of illegally sourced timber. So in conclusion, the international forestry, paper, and wood products sector is diverse, with many companies in the sector. There are 336 companies in the sector, with over 10% of their revenue coming from the sector. These are publicly traded companies. Yet, the sector is dominated with 20 companies having over 50% of industry-specific revenue and 50 companies, having 80% of industry-specific revenue. So it's highly concentrated. The sector has yet to address environmental social governance risks, with few companies having policies on climate, biodiversity, water, and other risks. Similarly, equity investors who invest in shares in these companies also have, they themselves, few of them have similar policies in place where they would require the companies that invest in, such as companies in forestry, paper, and wood product sector, to have these similar policies. Bankers in the sector are global in nature, and few have issued green bonds or green loans to retool industry towards sustainability. Mislabeled timber is a serious concern in the sector with significant risks and can cause individuals, executives, and companies to lose their job and companies to be fined tens of millions of dollars. Misusing financial accounting is a real concern across industry. And we see this in the Noble Group, while it's parallel in palm oil. Obviously, again, a vegetable oil, not a forestry, paper, and wood products company per se, but we see that across industry. Current lumber prices are more of a function of COVID-constrained economy entering recovery than changing of underlying economics. So with that, I think I've reached my limit. Thank you very much. My name is Gabriel Toumi. And if you have any questions, please do not hesitate to email me. Thank you very much, and thank you, Sheila and Blair.